Yan. Okay. So to continue our discussion with assignment, now under notification basis, let us have this sample problem. So Castle Company assigned 1,800,000 accounts receivable to 10th Bank on January 1, 2019. 90% of the accounts for the loan less 25,000 service charge as cash advancement. The company signed a contract of loan and the loan is payable in 1 year with 1% monthly interest on unpaid balance. Collection from assigned accounts as payments to the principal of the loan, principal amount of the loan plus interest on unpaid balance. The difference of this problem with the problem that we have yesterday for non-notification basis is that if you can see under transaction 1 and transaction 3, it is provided now, example in transaction 1, that 10th Bank was able to collect 237,500 worth of cash after corresponding 5% cash discount offered for prompt payment. Later in that day, the collections were applied as partial payment for the loan and interest were paid separately by the company. Therefore, by that statement, it is said that it is notification basis due to the fact that it is the 10th bank that was able to collect from the customers. Therefore, if we're going to go back with the concept of notification basis, following the distinguishing feature of notification basis is that we can say that the customers pay directly their accounts to the bank, no longer on the company. So in this problem, the customers did not pay anymore to Castle Company. Rather, they pay their accounts to the to 10th Bank immediately or directly. Right? Then another thing is that the loan was applied by the bank itself as payment of the loan. Then the interest paid separately by the company. Still the same requirements, journal entries to record the transaction on January 1, 2019. Of course, we're still going to journalize transactions 1 to 3. Net cash proceeds, assigned accounts receivable and loans payable balance, then the equity on assigned accounts. So to solve this problem, our again assumption is notification basis. Since they're just almost the same problem, only the assumptions came different. The computations for the net cash proceeds still the same. Start with the face value of the loan, 1,620,000 less service charge of 25,000. We still have 1,595,000. Then to took effect the assignment of the accounts receivable, we debit accounts receivable dash assigned and accounts receivable credit for 1,800,000. Then to took effect the loan, we debit cash 1,595,000, service charges of 25,000, and loans payable of 1,620,000. As of that point, the same journal entries and amount computation. We're going to have or appreciate the difference of notification basis with that of the non-notification basis. If we're going to analyze transactions on January 30 and December 31. This should be December 31. Okay, so for January 30, take note that on January 30, it is the 10th bank or it is the bank was able to collect the cash from the customers. So yan. If we're going to go back with, wala. Ayan. Okay, so if we're going to go back with our solution with non-notification basis, observe that we have a separate journal entry for the collection. We debit cash, debit sales discount, and credit accounts receivable dash assigned. Cash debited to 237,500, sales discount 12,500, and for the accounts receivable, dash assigned 250,000. Then we took effect the payment of the loan by debiting loans payable, debiting interest expense, and crediting cash. So we have separate journal entries for the collection and the payment. However, under notification basis, as you can see, since it is the 10th bank able to collect the cash from the customers, then that means the company no longer have to debit cash because the company did not receive cash anymore. Then how do the company going to record the collection? Now, under notification basis, in order for the company to record or to take effect collection in the records, the bank will notify the company of the collections. Right after the customers able to pay to the bank applies the collections as payment. Then afterwards, inform or notify the company of the collections. So yun yung mangyayari. So we immediately debit loans payable for 237,500, signifying that because of the notification, the company was able to know that the bank applied the collections as payment of the loan. Since it was 237,500 amount collected in cash, so we debit loans payable to 237,500. Debit to sales discount of 12,500. That means that we still have the right. No, we have the one. We are the one to record the sales discount, not the bank, because the bank only after for the collection, but not on the sales discount. We have the records for the sales discount. Then we debit interest expense, still the same, 16,200. Then we credit accounts receivable dash assigned 250,000, and this is to signify the collection. We know that there is a collection if we credit accounts receivable. Okay? The only difference under notification basis, because we do not debit cash anymore to signify collection. Okay? Then we credit cash for the interest expense paid because the interest was paid separately by the company. Sometimes in other references or other books will provide that the collection made by the bank will be applied to both interest and the loan. Okay? Be careful for that because credit to cash will depend if there are any excess interest to be paid or any amount of loan to be paid in excess of the cash collections applied in excess of cash collections applied by the bank for both loan and interest. If the assumption of the problem is that collections were made as payment to both principal and interest. But since the problem provides that the collection is solely for the principal amount of the loan, then we debit the loan for the entire amount of cash collections as applied payment. Then interest will be paid separately. Okay? Were you able to catch up? Kindly raise hand. Okay. So now, for February 28, still the same. We don't have any difference in journal entry under notification and non-notification basis because the transaction is only referring to the sales return. So we can debit sales return and credit accounts receivable dash assigned. Okay? Then for December 30, for December 30, 10th bank was able to collect 550,000 worth of assigned customers accounts, and later in that day, the collections were applied as partial payment for the loan. And interest were paid separately by the company. So yan. So our solution In contrast again with non-notification basis, as you can see under non-notification basis, we have separate entry, complete journal entry for the collection of the assigned accounts by debiting cash and credit uh, accounts receivable dash assigned, and separate journal entry for payment with debit loans payable, debit interest expense, and credit cash. But under notification basis, as if we merge the entry. Okay, we eliminate the debit to cash because we did not receive cash. Still retain the credit on uh, accounts receivable dash assigned. Then credit cash for the interest expense recognized. So debit loans payable for the entire amount of 550,000, debit interest expense and credit accounts receivable dash assigned, and credit cash. Okay? The only reason why did I present it that way, because for you to appreciate that the difference under notification and non-notification basis is on how we set up the journal entries. Okay? But the effect on the accounts, especially on the balances that we're going to compute for purposes of the problem, almost the same. Walang pinagkaiba. Only that we differ on the journal entries, the setting up of the journal entries. Now, to answer the requirement 2, net cash proceeds, still the same of 1,595,000. For the loans payable, the same. Start with the face value, then look for any debits for the loans payable account. That would signify payment of the loan. So we have 237,500 on January 30 and another 550,000 on December 31. That should be December 31. So loans payable still at 832,500. Then accounts receivable, start with the assigned accounts of 1,800,000. Then from the 3 sub-transactions, look for the credits. So we have a credit on January 30 of 250,000. Another credit in February 28 because of the return. Then another credit on December 31 of 550,000. So our accounts receivable is 975,000. Compare the two, we have the equity on assigned accounts of 142,500. Again, the purpose of computing for the equity on assigned accounts is for us to track the balance of the assigned accounts, if it is still sufficient to cover the balance of the loans payable. Should the accounts receivable assigned no longer sufficient enough to cover the balance of the loans payable, the company needs to reassign accounts receivable just to satisfy payment of the loans payable until the loans payable is fully paid. Okay? So that's the difference of notification basis and non-notification basis. Kindly raise hand if able to catch up. Wala namang halos difference sa computations ng interest, balances. Nag-differ lang talaga on the journal entries. The amount debited and the amount credited. Yan. Okay? See the difference. Yeah. Okay. Then we move forward with factoring. So for factoring, it involves absolute sale of accounts receivable to an identified buyer called factor. So the one who buys the accounts receivable is called the factor. It results to a selling company transferring the ownership and or risk and rewards in collecting the accounts receivable to the factor. Now, if we're going to compare factoring with the first two receivable financing scheme, which is yung pledging at saka yung assignment, factoring of accounts receivable is considered as absolute sale. Therefore, there is a transfer of ownership. Okay? There's a transfer of ownership. If we're going to illustrate factoring, it's just like this one. Upon selling by the company of its accounts receivable to an identified factor, for example, again, we have it yung bank. The bank will now own the accounts receivable. Okay? That ownership will be transferred from the company, from the selling company to the factor buyer. Then the bank or the factor buyer will have all the risks and rewards in collection of that accounts receivable. What does it mean by risks and rewards? If the customers pay, then it's good. If the customers did not pay, then what does it mean for the collecting company? It's a different thing, so it's bad. Right? So the selling company no longer has responsibility of the collection. It is already on the factor buyer. Okay? The only thing, yung pinakahabol lang ni company when it comes to factoring, to sell the accounts receivable, relieve the responsibility of collection, then of course, the cash proceeds. Okay? The cash proceeds. So the important points that we can consider for factoring is that there is a transfer of ownership over the receivables at transaction date. By such assumption, we can say that the total assets and the total receivables of the company, of the selling company will change at transaction date. Again, the total assets and the total receivables of the selling company will change at transaction date. It is because the transaction of factoring involves absolute sale. Di ba pag nagbebenta, we give up something. It is in contrast with pledging and assignment. Because under pledging, we did not give up anything at the date of transaction. We did not give up our receivables. We did not transfer ownership over our receivables. But factoring is a different concept because transfer of ownership is required or is involved. Okay? So receivables are only decreased. Receivables are decreased immediately because of the sale. So factoring could either be under casual sale or continuing agreement. When do we say that factoring transaction is considered a casual sale of accounts receivable or continuing agreement sale of accounts receivable? So we start with casual sale. It is a casual sale if the company has the discretion to sell its accounts receivable anytime when needed. Which means it is the discretion of the company to whether or not sell the accounts receivable. So if the company is in dire need of cash flows, and it can sell its accounts receivable anytime without any agreement with other company to continue selling the accounts receivable. Parang when I feel like it, parang ganon. When I need it, when I need additional cash flows, then I will use my accounts receivable to generate cash flows. Parang yun lang. It is on my part or on the part of the company. Okay? However, continuing agreement is different. Continuing agreement is different. So for casual sale, let us have this problem. Night company, in order to stabilize its liquidity, forced to factor its accounts receivable with a worth 2,555,000 with an allowance for doubtful accounts of 215,000 on January 1, 2019 for purposes of coping, for balancing currently maturing obligations and other operation purposes. Examination of the quality of the accounts. The company and the identified factor agreed up to 90% of the net value of the accounts receivable as cash proceeds. Requirement to compute the net cash proceeds received from factoring and prepare required journal entries to record the transaction. So yan. We interpret the problem. The problem is referring to casual sale. Okay? So Night Company factored its 2,555,000 accounts receivable. That accounts receivable has a related allowance, of for doubtful accounts of 215,000. Now, upon checking quality of the accounts, by the way, factoring of accounts receivable involves quality check of the accounts receivable. Usually for factoring, the accounts receivable that only accepted for factoring transaction are the good receivables, good accounts receivables, meaning those that have high collectibility rates or probability of collections. Not just possibility, but probability of collections. Okay. So take note, upon examination of the quality of the accounts, the company and the identified factor agreed for 90% as cash proceeds. The basis was the net value of accounts receivable. So what does it mean? When we say net value of accounts receivable, kindly recall yung amortized cost. Yung net realizable value ng accounts receivable. Why am I emphasizing this one? Some problems will provide that the basis of cash proceeds, like for this one, 90% as cash proceeds, 90% will be based not on the net value of the accounts receivable, but on the balance or on the gross carrying amount of the accounts receivable. Okay? So when we say gross carrying amount, we are referring with 2,555,000. But when we say net realizable value, we mean the 2,555,000 minus 215,000. Okay? Balance is different from net realizable value. Okay? Net realizable value. When we say balance, we mean the 2,555,000 only. We are referring to the balance found at the account of each accounts. But the net realizable value or the net value, it should be the value of an account or of an asset less any uncollectibility or loss on realizability. So yun, pag sinabing net value, we mean 2,555,000 minus 215,000. So how much will be our basis? Okay? To what amount we're going to multiply 90% if we mean net value? Yun nga, Miss Kyla, 2,555,000 minus the doubtful accounts. Magkano yan? Okay, how about the others? Magkano yan? Okay. So help the others were able to get 2,340,000. So yun yung that is the value that we're going to base as the net value of accounts receivable. Okay? So our requirement, net cash proceeds and journal entry. So how do we solve this problem? We simply start with the face value of accounts receivable, 2,555,000. Then we less allowance for doubtful accounts of 215,000. Net value of the accounts receivable is 2,340,000. Multiplied by 90%, our gross cash proceeds, 2,106,000. Then we look for service charges and other expenses in relation to factoring. So no other information, so we can assume 0. Net cash proceeds will be 2,106,000. Then afterwards, we compare carrying value of the accounts receivable or the net value of accounts receivable with the net cash proceeds. So loss on factoring is 234,000. It is a loss because we receive more than what we have disposed or what we have sold. We sold 2,340,000, but we only received 2,106,000. So that is a loss. So our journal entries to debit cash. Debit cash of 2,106,000. Then we debit allowance for doubtful accounts, 215,000. Then we debit loss on factoring, 234,000. Then credit accounts receivable for the entire amount of 2,555,000. Okay, so if able to catch up, kindly raise your hand. Kindly raise hand. Okay. So yun na, that is factoring. What about if we talk about factoring under continuing agreement? So if we're referring to factoring under continuing agreement, it is under continuing agreement if the company had made agreement with another company, which is that another company is referring also to the factor buyer, okay? To sell its accounts receivable, usually after immediate sale to customers on a continuous basis. If factoring is on a casual basis, of course, hindi siya continuous basis. Okay? Kasi nga, it is on the discretion of the company to sell anytime. Okay? My accounts receivable or the accounts receivable of that company. But for continuing agreement, upon immediate sale, okay? Upon immediate sale, I'm going to sell my accounts receivable to the factor immediately on a continuous basis. So every time I have accounts receivable, I will sell it directly to the factor. It depends on how many factor I engage into or I agreed into for the factoring. As long as every time I have accounts receivable, I will sell to those factor company. Okay? So that's the difference with continuing agreement and casual sale. Again, casual sale, okay, another thing, casual sale, if casual sale means anytime, that means the company will factor existing receivables. Meaning those receivables, even if they have related doubtful accounts, as long as they are still good accounts receivables, meaning still have a higher percentage of collectibility, then we can factor those accounts receivable. Good accounts receivable may be, though they are past due, we can say that they are from 0 to 90 days ata. Above 90 days or above 120 days, doubtful na masyado yon. So yan. But for factoring under continuing agreement, usually immediately after sale. So whenever a company recognize accounts receivable through sale, immediately the company will sell it to the factor buyer. So let us have this sample problem. So Speed Company factored its accounts receivable amounting to 1 million with credit terms of 5, 10, and 30 right after shipment of the goods was made in favor of the customer on January 1, 2019. Okay? So there is a credit term. Yan. What does it mean by this credit term? How do we explain 5 over 10, or what does it mean by 5 over 10 and 30? Sige nga, kung naalala pa yung basic accounting. What does it mean by 5, 10, and 30? Ay, hala, hindi naaalala ang basic accounting. Doon sa merchandising nyo, yung nag-prepare tayo ng mga journal entries. Oh, ito meron. 5 rate of the discount, 10 discount period in days, and net or no discount, 30 collection in days. 5% discount within 10 days, no discount within 30 days. Meron naman pala. Kala ko walang nakakaalala. Okay, so that's correct. Also, we can interpret N30 as normal price after 10 days or within 30 days. So therefore, no cash discount. Okay. The factor charge 5% commission based on the value of the accounts. Net of credit terms. Take note the 5% will be based on the value of accounts receivable of 1 million, but the commission will be based on the on the value of accounts receivable net of credit terms. So after considering 5% on the 1 million. The same with factors holdback. Factor, a 20% factors holdback of the value of accounts Value of the accounts net of credit terms. Okay? Then on January 10, the company was notified for a sales return by a customer amounting to 90,000, which later on that day the company received uh, the goods returned. After that, no other return of goods were made. On January 30, the company was notified by the factor that the remaining accounts receivable were collected, signifying for final settlement of factors holdback. Now, factoring also involves by the factor setting up so-called factors holdback. Usually, the type of factoring that factors set up, factors holdback account is yung continuing agreement. What's the reason of factors holdback? Ano yung purpose ng factors holdback? Factors holdback account is an asset on the, for example, in this problem, factors holdback is an asset to Speed Company but a liability to the factor company. Okay? This factors holdback account will be used by the factor as buffer or shock absorber kung baga. Sabihin na lang natin buffer. Buffer account for all loss on uncollectibility. For example, mga sales return. Okay? Sales return would mean that the accounts receivable will no longer be collected. That's the thing that the factor is trying to avoid. That is why there is setting up of factors holdback account. Factors holdback account or sometimes receivable from factor. A receivable from factor. Yun yung purpose ng factors holdback as buffer of sales return and other loss for uncollectibility. Okay? So yan. After collecting all the accounts receivable, the factor will remit any balance of the factors holdback to the company. Okay? In this problem, dun kay Speed. The same requirements. Net cash proceeds and journal entries. Okay? Net cash proceeds and journal entries. So our solution, we start from face value of the accounts receivable, which is 1 million. Allowance for sales discount, directly recognizing the sales discount. So 1 million times 5%, we have 50,000. Then, less commissions, which is 5% based on the amount of 1 million minus 50,000. Or the value of accounts receivable after credit term. So that would be 1 million minus 50,000 times 5%. That would be 147,500. Then less factors holdback. Okay? Factors holdback. Or other term for factors holdback, we can say factors retained amount or factors retainer. So 1 million minus 50,000 times 20%, we have 190,000. So net cash proceeds will be 712,500. To journalize our transaction for the factoring, on January 1, 2019, we debit cash for the net cash proceed of 712,500. Debit sales discount, 50,000. Debit commissions or factors fee, 47,500. Receivable from factor, which is an asset to Speed Company. This is an asset account of Speed Company, 190,000, and credit accounts receivable, 1 million. Okay? So kindly raise hand if able to catch up to that point. Okay. Then for January 10, 2019, to journalize the sales return, we debit sales return and credit receivable from factor. Debit sales return to 90,000, but receivable from factor or factors holdback credit to 85,500 only. Reason. Take note that there is a corresponding sales discount. There's a corresponding sales discount. Immediately after sale, wala namang collections na nangyari. So therefore, no sales discount had been recorded. Okay? No sales discount had been availed, rather. Okay, had been availed. So therefore, because there is a sales return on January 10, which is still within the discount period, because it says here, there is 5% cash discount within 10 days. Since return was made on January 10, which is exactly 10 days from January 1, original transaction, therefore, the recorded sales discount of 50,000 will be decreased by the equivalent amount of sales discount based on the returned goods at selling price. Sales returns are always at selling price. Okay? So sales return times 5%, we have 4,500. That's why we only credit receivable from factor 85,500. Now there is a question. Sir, what if the return was made beyond discount period? Do we still deduct a corresponding sales discount before crediting receivable from factor? Or is the receivable from factor will be decreased or will be credited, decreased or net of corresponding sales discount? Yes or no? Sige nga, yes or no lang. Yes or no lang ano. Sagot. Okay, sige. It's up to you to find out. So yan, we debit sales return, credit sales discount 4,500, and we credit receivable from factor 85,000. Then for January 30, 2019, to recognize that there was a notification by the factor that the remaining accounts receivable were collected, meaning the accounts receivable was in good quality. Therefore, all of the accounts receivable except for the sales return were collected. So, should the accounts receivable were all collected and no other allowances or returns were made, the factor has the obligation to remit any balance or remaining balance of the receivable from factor or factors holdback. Okay? Kasi the only purpose of the factors holdback is buffer for losses. Sir, what if yung factors sold back hindi sufficient. Hindi siya sufficient. Ano kaya mangyayari? Okay? Ano kaya mangyayari? So kung hindi sufficient yung factor sold back, it depends on the agreement now of the party. If the selling company will absorb the losses or sales return or the non-collectibility of the accounts receivable, or the factor will forgo the any excess over the amount of factors sold back. But the thing is, if there is an excess amount for the factor sold back, ibabalik dun sa selling company. Which is in this problem, dun kay speed company. Okay, so to journalize, we debit cash and credit receivable from factor 104,500. How did we arrive 104,000? Initial amount of 190,000 less amount charged due to sales return net of discount, 85,500. So balance for final settlement, 104,500. Okay? Yan. So any questions? Okay. So next meeting, we're going to discuss discounting. So I guess next meeting, we're bound to discuss discounting. So that is tomorrow. Okay? So within this week, we can finish the entire unit 2. So that you can prepare with the final, block 1 final examination on January 17. Okay? So if there are no any questions, we can call this a day. Thank you for attending. Appendix 4. Ala, bakit hindi included? It should have been included. Kasi kasama dapat yun. Unit outputs. So you mean you don't have, Miss Joanne, you don't have copy of the unit outputs? Oh no. Anong nangyari? Bakit hindi complete yung modules? Ayan, printing. So maybe it's in the error on printing. Sige, I will send it na lang through G Suite email. Please remind me in the Google Chat. Yun lang ba yung wala doon? Yung ibang activities, yung exercises, nandun. Okay. So you have the quizzes and activities. So only the output. So sige. Later on, I will send it to you through G Suite email. Thank you for informing me. So for those who have the same concern with their module, please inform me. You're welcome, Miss Lazarte.